Welcome back to Teshkid FX for another Polygon Matic price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Polygon Matic chart, which has continued to obey the Elliot of structures and has managed to break above a key area of resistance at around the $0.9557 mark, and we're also trading above the 20-day MA here on the 4-hour chart at the time of this recording. And before I get into that part of the technical analysis, make sure that you give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to start the video here on the 4-hour chart by first giving you a recap of what has been happening and also give you the short-term scenarios that I'm expecting to play out, where you can see that after making our low at around the $0.32 mark, which is down here, we started a very nice bounce to the upside in a move that had been obeying the Elliot structures, where you can see that I have this Elliot structure in yellow having the wave 5 making its peak at around the $1.3 mark, and also completed the formation of that larger Elliott wave count 1 to the upside, which I have here on the charts in this Elliott wave structure in blue. And after seeing the formation of a larger Elliott wave count 1, whatever we expect next is a corrective structure in the formation of a second wave. And here on the Polygon Matic chart, you can see that I have this wave 2 making its low at around the $0.74 mark, and that is after seeing this ABC corrective structure having the wave C fully maximizing the formation of that second wave. And after seeing the low for that second wave, whatever we expect next is a bounce to the upside in the formation of this higher Elliott wave count 3. And because a wave 3 to the upside is an impulsive wave, we also expect to see a 5-wave structure in formation within that higher Elliott wave count 3, and I believe that is what is playing out here on the Polygon Matic chart, where you can see that after making our low for that second wave, we can now term this as the first wave to the upside, making its peak at around the $1.05 mark. And after seeing the high for that first wave, whatever we expected next is the formation of a second wave, and using the Fibonacci's connecting them from the low of the first wave to the high of that wave 1, that gives me a minimum retracement area in the formation of that wave 2 between the fib level 0.382 and the fib level 0.618, and that is the minimum that I'm expecting this second wave to the lower side to do. And you can see we saw a reaction of the fib level 0.382 once we saw that retracement over here. And after seeing the reaction of the fib level 0.382, we have tried to push a little bit higher, where you can see we saw this bounce to the upside, getting back to the key area of resistance at around the $1.05 mark. And this is the second time that we are trying to break above this key area of resistance, and because of that, that has resulted to the formation of a double top, which is a chart pattern that should break to the lower side. And drawing the chart pattern, we can have that as the second top, and we have also seen the neckline down here, and this is a chart pattern that can break to the lower side, having the minimum target area of the breakout being given by the height between the tops and the neckline. And I can get that height and then place it below the neckline, so I can place it down here, and that gives me a minimum target area back to around the $0.7986 mark. And in case we see a breakout out of this chart pattern, then that will be fully maximizing the formation of this second wave to the lower side before we can expect that explosive move to the upside in the formation of that wave 3. But we also need to have in mind that after seeing the reaction of the fib level 0.382, that could also mean there are chances that the low that we made over here at around the $0.9179 mark could be the low for that second wave, and whatever we are seeing over here could be the start of the formation of this wave 3. And for that to happen, we need to manage to break above the wave 1 high, which lies at around the $1.05 mark. So for us to say that we are in the formation of this wave 5, we need to see Polygon Matic continue pushing higher, manage to break above the wave 1 high at around the $1.06 mark, and once that happens, we can also expect a retest. And once the retest is in, then we can continue expecting even higher prices in what we could term as the formation of that wave 3 to the upside. And once that plays out, then I can also sketch out a minimum target area to the upside in the formation of that wave 3. But for now, it's too early to say that we are in the formation of that wave 3. We need this confirmation, a break above the wave 1 high, and also see a retest of that key area of resistance and continue pushing even higher. And unless that happens, I still expect one more new low in the formation of this second wave to the lower side to fully maximize this target area before we can expect a bounce to the upside in the formation of that wave 3 to the upside. And also taking a look at the indicators before I give you the long-term scenarios that I'm expecting to play out. Here on the RSI, we are trading at around the 54 mark, meaning we have massive room for us to support any movements to the upper side and also to the lower side. Also taking a look at the MACD, we have been able to print a bullish cross, and we're also seeing an increase in the buying momentum, meaning there are chances of continuing to push even higher given the support of the area of support at around the $0.9557 mark, and also the 20-day MA here on the 4-hour chart, and manage to break above this key area of resistance at around the 1.05 and continue pushing even higher. And jumping to the daily chart to give you the long-term scenarios that I'm expecting to play out. Here on the daily chart, you can see that I have this Elliot wave structure in red, where you can see that Polygon Matic, from these low prices that we had been trading within, we saw a very nice bounce. We saw a very nice bounce to the upside, making it to an all-time high at around the $2.9 mark in what I'm terming as a higher Elliot wave count 1 before we started the bear market, where we had been seeing no prices in this ABC corrective structure, which took us back to around the $0.32 mark in what I'm terming as a higher Elliot wave count 2. And there are chances that whatever we are seeing at the moment could be the start of this higher Elliot wave count 3 to the upside. And here on the daily chart, I have a target area to the upside in the formation of that wave 3 at the FIP level 1.618, which perfectly lies at around the $5.0892 mark, and that is the minimum that I would expect that wave 3 to the upside to do before we see a wave 4 then continue pushing even higher in the formation of that wave 5. So that is what I'm expecting on the short term and also on the long term scenarios, and I'll be keeping you updated.